Hello, everyone. No camera on this stream today. Let's get the money bags in the chat. Money bags in the chat. Thank you all for watching. Getting no stream today. And also, I got a bit of a surprise. Here we go. It's a light background. No, your eyeballs. It's a light background. No. Bitcoin's doing particularly well right now. Hey, Leon. Hello, James. I can switch this back to a dark background if it's too much, but I don't know. Today was kind of a light theme sort of day for me. Man, DXY's been going up, and up. It made a new high today. It's been making highs since it dropped so hard here on ECB. Wow, only 30% of the time are you ending the day above this R1 pivot.
Over 12 months they could...
Oh. Trying to load music. I got a loud cat coming down the hallway here. So if you hear a little cat go chirp, 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 and meow, meow, meow. Yeah. Hello. Too bad I don't have the camera on because she's right here. Hopefully you guys don't mind the lack of a camera. I'm about to go out after this stream is over. Oh, one of the things I noticed with one of the problems with the white background is that you can't see the spectralizer. Here, let's try it. Oh, wow, now it's red. Look at that. Now you can very clearly see. Now you can see my voice. Okay. Hey, Santiago. Cool, nice to see. People are hopping in, saying hi. Bitcoin's doing well. NQ hasn't been doing so hot. It looked like it finally rotated here. US oil took such a hard hit. Wow, that must have moved CAD. I believe it moved CAD. I was looking at the charts earlier today. I've been in a little update on my positions. I've been in a minor drawdown on Eurodollar, but I've been adding into it over the last 48 hours. And, yeah, things are looking good. I'm probably going to be out of that drawdown by tomorrow. Guys in the chat, post what assets you want me to cover for today. Because in the meantime, I want to show you something. I'll use DXY here as an example. So check this out. So you know with Wayne's pivots, how you'll be going back and forth between time frames, and the pivots will update what resolution they're using automatically. So when you go to a 4-hour, it switches to a weekly pivot. When you go to a daily time frame, it switches to a monthly pivot all automatically. Well, yesterday, on my day off, with, Father's Day and all, I spent some time to implement that feature into range probabilities. So now, here on a daily time frame, we have daily range probabilities, but if I were to go to a 4-hour chart, so those are our weekly pivot points, and those are our weekly range probabilities. And look at that histogram, right? Isn't it so obvious where we'll probably end the week somewhere above this weekly central pivot? 32% of the time you close above the weekly central pivot, but when you do, most of those closes occur right around here. Also, I'm coming up with a new visualization algorithm that will make it easier to bring your eyes' attention immediately to the particular parts of the histogram that are most pertinent for you to actually, start interpreting. And I have a couple of updates coming our way. So after the stream's over and I run my errands, I'm gonna be kicking out some updates here. Remember, like I said in that last stream, I got some good ideas for some updates coming along here. So, guys, let me know how you're feeling. Let me see what assets you guys want me to see. Pound, dollar, Aussie dollar, and the S&P. Gotcha, Santiago. I'll bring that right on up. Let's start with the Aussie dollar, because we just had the RBA meeting, right? Oh, it's almost like we planned this or something. Oh my god, it's almost like we're planning a rebound. Oh my god. It's almost like we planned this 4 days ago, last Friday or something. Here. Let's turn on... Wow, you do not come down here all that often. Yeah, once you started moving past this S0.5 weekly pivot, you're starting to deal with all these tail risks. And I wonder why I particularly pointed this out. Man, it must have had something to do with pivot probabilities, right? So let's load up. Oh, man. I don't know if you guys can actually see. Hold on one sec. Let me update the color to a black. Yeah, now you can see. Oh, it's almost like we hit the forecasted probability weighted pivot low or something. It's almost like this indicator uses statistics or something. Oh, man. Yeah, having a stop like at this S1.5 weekly pivot seems quite reasonable, but I would anticipate a rebound. I'd anticipate a rebound at this point. Let's look at the closing odds. Yeah. So here's a little bit of something that you can learn from this. So if, let's say, theoretically, I were to buy right here, right now. So there's my little buy line, right? Can anybody in the chat tell me what is my probability that we close or end the week in profit? And real quick, just for context, these probabilities here are telling you the probability of ending this week between any two pivots. So, just to give the answer, I don't know how much of there is of a delay on this stream or not. But if you want to know, the real quick, simple way of answering this question is, okay, if you want to know your probability of ending this week above the S1 weekly pivot, all you got to do is add up your 13% below and this 4.35% below, and then subtract that by 100. So this comes up to like roughly 17.3%. So 100 minus, call it 17, is 83. So 83% of the time for this particular week, we end the week above the S1 weekly pivot. 83% of the time. I don't know about you guys, but that sounds pretty damn good. That sounds pretty damn good. I like trades that have an 80%, at least historical probability of winning. You always got to take that with a grain of salt, though, which is why you have another layer of probabilities, right? That's why we have these tools here, the range probabilities, to say, hey, you know what? Now that we have a different set of reasons for going long here, we can use this to kind of determine if that's even really a smart idea. Maybe it seems like, oh wow, yeah, this is like the 95% of the time. If you go like only 5% of your probabilities for where the low is for any given week is like way below 67.4. So yeah, if you start going closer to 67.5, you start getting closer to this low and start going 67.4, 67.3, and you start getting close to this S1.5 pivot, I'd just be careful, right? Because remember what I just said, right, about that S1.5 pivot. So it lines up with our interpretation with range probability lows, and it lines up with our interpretation here with the pivot probability seasonal lows. So we have two different statistical inferences. We have a Bayesian approach with range probabilities, and we have a frequentist approach with pivot probabilities, and they both are using different selected bits of data. And we're combining the information we're learning from both of these distributions of where the low for the week is going to come in to better inform our discretionary trading decisions for what is most likely on a nominal basis to occur going forward. And nominally is simply a fancy term for whatever is the most likely probability, right? So if, nominally 80% of the time we end this week above the S1 weekly pivot. So the nominal expected, forecast, you could say, is that we will end the week above S1. And the non-nominal expectation would be closing below the S1 pivot. So unless we have a explicitly specific reason for anticipating further lows, which is why you got to read your outlooks, why you got to read your macros, why you got to still pay attention to the economic calendar, right? Why you still have to even listen to people who run foreign central banks and large trading and banking institutions, right? Go read the Outlooks channel, right? Join the Plan the Profit Discord, first link in the description, and just join the Outlooks channel. It's fine. Read that stuff for 2-3 hours instead of looking at charts for 2-3 hours, and you'll learn more about markets and future trading expectations than literally 95% of retail traders, right? Yeah, and then after that, I learned a little bit about some statistics and some financial history and some maybe financial engineering, just how the mechanics of finance and economics work and how it actually interacts with the real world, not like some, not some, efficient market hypothesis stuff, right? And by that, I'm simply talking about stuff like the dollar smile. The dollar smile is an actual effect that you can see that is somewhat tradable and helps explain some of the US dollar movements and why it gains strength and why it gets weak in various different macroeconomic regimes. But then you go ahead and try and compare that to trying to apply something like efficient market hypothesis to your trading, and you're like, well, sometimes it's not helpful, sometimes it is. Yeah, just go ahead and ask any quant. If you want to get two quants into an argument, just get them talking about the efficient market hypothesis for long enough. Personally, I like adaptive markets. I like the adaptive market hypothesis. Go ahead and throw that one into Google. That's a good 30 minutes of reading if you want something interesting to read. Adaptive markets hypothesis. I think there's supposed to be a new book coming out about that relatively soon, if it's not out already. I look forward to that. Pound dollar was one of the other things that Santiago wanted me to take a look at. What other assets did you guys want me to check out? I see Leon also wants me to look at... for a sec, I thought he wanted me to look at gold, but then I just looked at the text and it says... Oh, Pascal, you're here. Nice to see you. Nice to see you. A couple of money bags in the chat for Pascalio. Let's see here. Alright. Let's go off to pound dollar. I wonder, before I switch, are we going to be at a likely high or a likely low? Let's see, let's find out. Oh, man, yeah, my expectation was that we'd go higher right off the rip. But it looks like we still have a bit more of a move lower. Real quick, I'm going to bring up seasonal forecasts to roughly find out if we can have some expectation of where we could bottom out. Yeah. So 16th trading day of June, that's going to be around the Thursday. That's maybe when you start to get more neutral seasonal expected value for the trading day. Yeah, so maybe somewhere between the 17th to 19th trading day, somewhere around here. But that's Friday to Tuesday of next week, so I just... yeah, you know what? I'd be on the more careful side for pound, trying to find the low on where the pound's gonna end up going. I'd have some reasonable expectation that we'd get to maybe 126 by the end of this week. Maybe just into the low 126 ranges. Let's check out how that lines up with range probabilities, though. So, because while these are definitely useful statistics, I'm kind of interested in trying to figure out. Yeah, we'll probably go just a hair lower. If you want to be on the more conservative side of your expectations, maybe 126, 127, roughly around here. And I'll even put an arrow with a timestamp on it so you know I'm serious. But it'd probably be like, you know, it'd have to happen over a 24-hour period where you just kind of slow down, the volatility kind of ekes forward, because there's still pretty bullish positive expectations considering how hawkish the Bank of England is getting on the Great British Pound. Oh man, good song. So yeah, maybe over the next 2 or some days, we end up at this low in the histogram, because you guys can see this, right? How there's a bump in our histogram roughly right around here, and there's another bump roughly right around here. I'll go to a 4-hour chart and see if it changes, because I think it might not be placing 100% correct window. It should be starting from like way up here. Yeah, and now the calculation's timed out. And I figured out how to improve the indicator so this happens like significantly less frequently. Oh my god. Not only that, but hopefully we'll be able to get more simulations. So more than just 3,000 to 5,000 simulations. So hopefully that'll be coming in an update sometime soon. I'm gonna real quick just try reducing the look back to see if I can try and get this to jump up to around here. Yeah, you can see how now that changes quite significantly. Yeah, I still see when I actually look at it. Yeah, you can see the bump in the histogram still. So yeah, you can still see the statistics are accurate. Even when you do have that graphical glitch, it's just, man, it doesn't look pretty, and I'd like it to just work automatically. So yeah, you get a decent number of your lows here. If you bought here, it's really not the end of the world, right? Like, you may be down 50, 60, 70 pips. But there is probably going to be an opportunity to buy again roughly around the 127 spot. But if you start cracking below 127 in a significant fashion, I'd be on the more careful side. You know what? Just for fun, I want to see just like what the last 400 bars look like. Oh wow, you can actually see nice little bump here in our distribution right here if we only are counting the last 400 bars here for our data. How much in time is that? Is that like a few months in time, right? Are you risk on or risk off? I'm risk off at the moment. I'm relatively long the US dollar at the moment. And I was long going into the ECB meeting, so I've been in a a tiny bit of a drawdown because I was getting short around here and getting short around here, and so I have a net position right on a few assets that while they're still in drawdown, I've been able to, because of my conservative position sizing, and my conservative position sizing is there because of the conviction I have on certain trade ideas, right? I'm just gonna be frank. Yeah, sure, everything's in drawdown at the moment, but it's in a conservative drawdown now that I've had some relief here. And I have still some expectation of seeing more dollar strength. And at that point, I'll be able to curb away a lot of those drawdowns into exiting at profit or minor losses or at major profit in some situations. Because there are some assets I anticipate are going to do particularly better than others. And I also anticipate some assets are going to be outperforming their expectations or underperforming their expectations going forward in the future. And that's all based off information I've learned off reading outlooks, right? And my own trading expectations based off talking with other really good traders, right? Yeah. And then also my statistics for my risk management, right? And if you want these tools, links in the description, go to the WAP shop, and you'll find a trading group plus indicators package. It's $100 a month. Like, okay, come on. You go and you check out every other person who sells anything trading related. They're asking $300, $400, $500. $100 a month, you get access to not just these indicators here on the chart, but all my indicators and future indicators. A trading group, a chat with all my trades in it. One-on-ones with me if you need help with interpreting these indicators, right? Yeah, and then there's a private trade group forum for posting trade plans with these indicators and learning from each other. Man, people really learn how to use these indicators so quickly. Oh man, I'm so impressed with how fast some people learn this stuff. Yeah. So even when we're only looking back the last 400 bars instead of the last 5,000, we're still getting relatively the same decisions based off our distribution here. As far as our risk to the downside here on pound dollar, yeah, you can see some more drawdown based off the seasonal expected value for the next couple of trading days. You can see a couple more down bars here on the pound dollar. Once you start going past this S0.5 weekly pivot at 126.5, I'd start getting a little puckered if I was still going long into this, right? Because that means, heading to 126, getting just below. Now you're starting. This is all tail risk. See all these little blips right here that go way, way down all the way to this like S2. This is all falling knife stuff. This is telling you like, hey, if you're anticipating a low like way down here, these are all falling knife stuff based off this weekly time frame. Yeah, I gotta skip the chiptune song. Oh, we're going on to another song called B Shop. I actually kind of like this song. Alright guys, let's go on to the next pair, or maybe another asset. I see James. Hey James, you want me to look at pound yen, euro, Aussie? Alright, I'll look at euro Aussie first. because we were just looking at that in the trade group. Yeah, there was some specifically good weekly probabilities right here. You can see that while the statistics were still pretty good, and we can bump this up probably back to 4,000 look back, and still get something relatively similar. Whoa. Yeah, those are actually pretty flat odds all throughout right here. Yeah, man. So getting your low right there. Yeah, man, I'd be... Yeah, that's quite that's quite an uncertain skew. So the thing that's got me kind of caught off guard here looking at this histogram is that you see how kind of flat this looks? When it looks more flat and squished across a wider range of prices, it means that your probability of, let's say, getting your low here or getting your low here are effectively similar. They may not be exactly one-to-one the same, and there's always factors like autocorrelation and volatility that go into effect. Oh, now I got it. Just turn that. All right, we'll keep going. Yeah, so there's other factors that can go into these probabilities that can, help you skew or figure out what's maybe a little more likely or not so likely, but just using the information that's at hand with the assumptions that we're using for these statistics. And so long we understand the assumptions that we're using when going into these indicators, we can avoid misinterpretations. Right? That's a major thing when it comes down to using any sort of statistical anything, right? Anything with statistics. If you don't understand the assumptions that you're making with the methodologies you're using on the data that you're using those statistical techniques on, if you don't understand the assumptions, then you can be at risk of doing misinterpretations and run into some significant unexpected results. Yeah. So just with the data here at hand and the assumptions that we also have here at hand, I would just be on the more cautious side looking at this data here, right? So this is data using like the last 4,000 bars to generate this histogram, right? But let's go ahead and use a seasonally sampled distribution and check that out. 42% of the time, close to half of the time, your low for the week occurs between central pivot and S0.5. That is, I mean, if I was actually trading Eurodollar, I sure would have taken a shot right there at the open. Now, I don't get great leverage on a cross pair like this through Oanda. So, of course, I'm not even looking at this. It's not on my regular watch list of like assets to trade. But man, oh man, 156 pips up did this thing go. Because the Aussie got insanely weak. And Euro held its value relatively well. Man, oh man. So, guys, let me know what you're thinking when it comes down to the outlook for some of these economic events ahead of us. We have a BOJ speech. We have an ECB speech. I wonder how that ECB speech is going to actually impact this Euro Aussie. What else could be moving Euro Aussie? Let's see here. I don't see any Aussie quite yet, but I know there's stuff on the calendar for Aussie. Maybe it's PMIs towards the end of the week. Nah. Alright. Oh, I think I just saw something. I believe that's New Zealand. Yeah. Okay, so I don't see anything for Aussie here. Oh, there we go. Westpac leading index. I mean, don't get me wrong. It'll probably give some insight, but I don't know if it'll be immediately pertinent to Euro Aussie move. In Europe, there are many voices, and are not all reliable. For the visual learners, do you recommend a channel that provides these outlooks in video format? Oh, sure. Yeah, like if you're just starting to get into outlooks, I mean, don't get me wrong, like the best way to get the information from outlooks is to actually read them. But when you're just trying to get into outlooks, right, read 1 or 2 actual outlooks and then watch some of the Wells Fargo outlooks. Watch some of oh my god, Westpac releases so many videos every single week, and a lot of audio, just summarizing their bigger outlooks. Like, they just had their monthly June outlook, like this big 30-40 page outlook covering every single macro topic you could think of and every single currency out there. You could go ahead and listen. I think it's Bill Evans. I don't know exactly who was on the recording, but you can listen to someone from Westpac who had their hand in writing that outlook actually read out to you and discuss some of the things in that outlook that are particularly useful. Yeah. Westpac has audio. Don't get me wrong, not all of them have video, right? I mean, if you're looking for video and outlook information, you're probably like watching Bloomberg, probably watching Reuters, right? And then as far as the trading community goes and some of the more professional traders, there's always a discussion and a debate going on about the credibility of actually listening to those outlooks on those outlets, right? Because they'll allow a lot of different pundits to come on and express their views and opinions, and they're wide and varying, right? Westpac is going to cover Westpac's views, but Bloomberg is going to cover anyone who they let on's views, right? Like, they'll bring on Cathie Wood, and then they'll bring on, they'll bring on some Goldbug, right? And those two will definitely have like totally opposing views for market expectations going forward, right? I mean, it really just, the truth is that the reason why I say you got to read outlooks is so then you're also familiar with who's writing the outlooks, and you get kind of familiar with the expectations of, oh, here's this so-and-so analyst from Wells Fargo or Citibank or Chase or Bank of America. Here's so-and-so analyst. Oh, I know him. I've been reading his outlooks for like the last 6 months. And I know he's generally more accurate than the rest of the people who I listen to. He's got particularly high quality stuff. And then you can make those assessments about other analysts, right? Some analysts are just flat out better than other analysts. Either they bring your attention to new and novel factors that could be moving the market potentially in the future. Or it's maybe the clarity in how they write in reviewing information up to this point, right? There's all sorts of particularly good things that come out of reading outlooks. Let's go on to another pair here. We're just kind of staring here at Euro Aussie. What else can we do? I know James also brought up pound yen, but guys, remember, you can go ahead and request a couple more things here. Oh man, yeah. Thanks for the activity in the chat, you guys. We're gonna keep the show on the road here. Let's see here. Oh, nice to see you in here, Princely. Nice to see you in here. So let's head over to pound yen. I mean, where everybody that I've been listening to, when it comes down to the yens specifically, like, you gotta be careful. Yens, boy. You gotta be careful with these yens, boy. Yeah, let's go ahead and check out the daily range probabilities on this pair. Oh my god, yeah. Where's the threshold? Right around here, around S2 or something? No, the threshold was right around here. And by threshold, I'm talking about the tail risk threshold. So when you're just looking at this histogram, you can note like, oh, most of the time your low for the day comes somewhere here around S1, just above the S1 pivot, 181.2. And you can see there was some buying that occurred there right around this time in the early day. And then you had the rally, it came back down, you had a buy back up, and then at 1 a.m. in my time zone, we moved lower. And that's when we actually had a couple of we had a speech, and then we had a Treasury Guild. Oh, wow, the Treasury Guild option was up a whole %. Jeez. Wow. And it still fell on those yields rising like that. I gotta check out the yield spreads on this one. Whoa, those yield spreads got horrid on that speech. Enria, what did Enria say something like that was, you know, totally groundbreaking and shifting for Europe or something? What happened? Because she spoke right when that dump occurred, and it flipped all the yield spreads. Oh my god, what happened? Here, I'm real quick, I'm like scrolling down frantically through Financial Juice, trying to get to roughly the time when she started to speak. Underlying inflation is easing only gradually. Gotcha. Eurozone current account is... Ooh. It really dropped here. China cuts main interest rate as economy recovery fizzles out. Alrighty, so we're getting some stimulus out of China. U.S. listed shares of Chinese companies declined pre-market after less than expected cut. Oh, okay, so the market had the expectation that the cuts out of China were going to be more aggressive. So that bit of news came out at 1:30. I'm going to go ahead and drop down here to a 30-minute time frame. So right now, this 1 hour candle is just this big green dump, right? But let's see if this big green dump occurs around 1:30 instead. Oh, no, there's 1 o'clock. There's the... Yeah, there you go. There's 1 o'clock, and then 1:30 was the latter half of that candle, and then the yield spreads just continue to get worse and worse and worse off that news. Yeah, yield rate differentials. So cash rates from central bank, the differentials between the cash rates and yield spreads can be big market movers. And check that out. And by check that out, I mean this little bump in the distribution right down here around this S5 daily pivot. Just, you know, if you go and you just get any statistical model and throw it here on this chart, unless it's got a billion jillion different parameters, getting this sort of bump right here at the tail of your distribution. I mean, this is literally the tail. This is literally a tail risk. Like, when you read, like, Nassim Taleb, and he talks about tail risks, I mean, this distribution that I have here for modeling these peaks on this histogram, it does a good job of capturing that little peak. And this isn't an empirical distribution, it's an actual probability. Wow, yeah. That is pretty neato. Yeah, this little bump makes me scared of, like, effectively just dropping all the way down here, but I'm not totally going to be anticipating that. Anyways, there was something I mentioned earlier when it came down to actually the mechanical portion of actually trading and doing risk management here on this indicator. So check this out. You had two options for buying. So either as a conservative bull right around here, because, you know, most of the time your low for the day comes in right around here. So, you know, with my expectation going up like this, if I was trading pound yen, I probably would have bought here, right? And then as we had this dump, right, there's another buying opportunity because of this dump or hump, right? Well, we dumped into this hump of the distribution, right? This is just saying, hey, there's a larger probability of finding your low roughly around this S2, S2.5 pivot. So that seems reasonable. So this is another buying location, right? Somewhere around here. But then you see how the distribution gets super thin Like once you get past this S3 pivot, you're dealing with super low probabilities, right? 90% of the time, you're low for the day on any given trading day for, I think, the last 4,000 1 hour bars that we're historically looking through. 90% of the time, your low for the day occurs above this S3 daily pivot. So anticipating that the low comes below the S3 pivot is pretty darn unlikely. But now that you're actually past this S3 pivot, you're kind of in no man's land of where your low is actually going to end up. So this might be your low for the day, but based off these yield spreads, don't get me wrong, it looks constructive for the last couple of hours, but you probably want to start. This is like, be conservative. Yeah, this is technically falling knife territory, right? So buying past this S3 daily pivot, it's all falling knife territory. Maybe there's a little something to buying this S5 daily pivot, but I wouldn't even do that. That's a tiny probability still. There's one more thing we can do. We can look at our closing probabilities. Wow. Yeah, we're probably just going to end up closing sideways on the day. Oh my god. Yeah, we'll probably end up just closing the day sideways. All right, so yen got quite a decent jump in strength. Yeah. Bank of England around 240, which is roughly around here when we had another dump. 10 million allotted in 6-month ILTR operation. Gotcha. U.S. and China discussed South China Sea issues. That's good. Diplomatic relations between China and the United States are improving, which is a good geopolitical risk on thing. But we need to see more material improvement there. Tomorrow is UK CPI, and on Thursday, Bank of England interest rate. Maybe markets know something. Yeah, maybe they know that if CPI comes in hot, Bank of England's going to be even more hawkish potentially, because the UK has insanely horrid inflation right now. If I could, core inflation rate, we want this. Let's go to the chart. I mean, look at this. This is absolutely horrid. So this is inflation month over month. Actually, let's do year over year. That makes more sense. Check that out. I mean, don't get me wrong, inflation's coming down year over year, but 8.7%, and the forecast is only 8.4, so maybe it comes down to like here. I have a feeling maybe your inflation drops a bit more than that. I think we'll have a moderate down. We'll have a moderate lower year over year inflation rate, so there'll maybe be a positive surprise there. But even then, it's not going to stop the BOE from its hawkish policy, because this is horrid. This is absolutely insane inflation year over year, man. Let's see here. Anything else? Let's see here. Leon wanted me to also check out GA. All right, I'll check out Pound Aussie, and then I'll think. Well, real quick on the way, I want to check out, the Bitcoin. Let's check out the Bitcoin, because I remember it was doing especially well, and we did kind of cross this little threshold area roughly around here, I'd say. It'll be a lot easier for me to identify the thresholds once I add I have a new algorithm that I'm going to be implementing for the highlighting of these histogram bars. Kind of like how there's a highlighting here for where price currently is, right? Based off the high, the low data, right? So it's like, here's your low data. This gets highlighted orange because this is the bin where your lows come in. And look at that, 26% of the time, 25% of the time, your low for any given day on Bitcoin occurs exactly in this area right here. It's like a $43 range. You know, a 1 in 4 chance. I mean, that's insanely helpful, man. Insanely helpful. And it's got that little graphical bug with the jump, right? But you know, it's not going to be the worst thing in the world once I get that fixed, because I already got the solution to fix this now. Oh man, yeah, I'm looking forward to the next couple of updates for this indicator. There'll be some nice visualization upgrades for figuring out where the threshold line should be. There'll be some good visualization upgrades for getting rid of this thing. The indicator will be faster. Oh man, yeah, we'll be able to simulate more data, hopefully, hopefully. So if you guys want access to this thing, you know, hop into the WAP store, buy it, get access to all my stuff, get access to the one-on-ones, all that good stuff. You know, got to promote my stuff, but in all seriousness, this is these are good things here. Dollar CAD had a nice bounce. I was talking with someone about Dollar CAD over here, and I'm like, you know, you got 2 spots, and here's a cool thing. This indicator also works with bar replay mode. So you can just go to any day and bring up the range probabilities for that trading day. So you see here, we have a bimodal distribution for this particular trading day, right? So either your low comes in roughly around here, or your low comes in around here. And then check this out. That's why I drew this red box right here. It's like, oh, most of the time your top for the day comes in around here. And your low either comes in around here conservatively or down here aggressively. And yeah, the thing played out quite fantastically. Quite fantastically. A very, very straightforward trade plan, depending on the risk management you're willing to take and the odds and the different types of probabilities you're willing to accept. And man, oh man, was this a particularly good little blow off top to either sell or exit trades. Man, that was also I don't know if that was like the most high conviction entry in the world. Maybe if you were long off this and hoping to maybe buy just a bit higher and then the thing just ran up here. Yeah. From here to here seems like a reasonable trade, and that's 42 pips for within an 18-hour period. Maybe more if you go a little further back, right? And hopefully you missed this because there was a better trading opportunity up here for 61 pips. Yeah, let's go over to Pound Aussie because that was requested. Oh, I did draw this little linear regression channel, and remember the assumption that you make when you draw these linear regression channels. It's that if you're drawing these linear regression channels, real quick, you make an automatic assumption, right? Remember what I said when it comes down to when you're using statistical tools, you have to understand the assumptions being made with those statistical tools in order to have accurate assumptions and expectations into the future. Well, one of those things here is with this. So this is a drawing tool called, it's effectively a linear regression on the chart. So this is your mean and +2 and -2 standard deviations from that mean. So when you draw these linear regressions and you forecast them out into the future, when you start going out into this forecast, you're making the assumption that the future data out here is going to have similar statistical properties to the historical data that's getting sampled right around here. And notice how we broke past this and we started developing a new trend here on Pound Aussie. It means that the assumptions, whatever assumptions that we were making back here, no longer hold, because now the data is now like past the third positive standard deviation. Like it's now moved significantly enough that we have to say, yeah, whatever hypothesis we had for our trading expectations going forward from here, to anticipate a linear trend, we now have to update. We have to Bayesian update our expectations, and now we have to do a brand new model. And I genuinely don't think a linear forecast would be a good model for this, in all seriousness. But real quick, let's go ahead and load up this data, and you can clearly see we broke past a threshold right around here. And at this point now, you're starting to deal with tail risks. I think we're just going to end up getting sticky. We'll probably end up closing the day above this low, above 187.67. So we'll likely end the day up here. The yield spreads are getting a bit more negative on the 1 hour, but on the day, oh my God, just look how clear it is to read on a white chart, the yield spreads. Like, here's your positive yield spread, here's your negative yield spread, here's where you're starting to get some flipping, it's going neutral, and then your yield spreads start getting insanely positive. And this isn't TA, by the way. These yield spreads are not TA. These yield spreads are based off bond movements, right? You can see that right here. And this is an aggregation off lags of bond yield spreads. And you can see it looks like the things that are moving us most positively is the current yield spread compared to the yield spread from 7 days ago, which definitely makes sense, right? 7 days ago was like right around here when we were most negative about a week ago. And now we are, this is like a no shorting scenario for me. When the yield spreads are this positive on a green candle like this is just, the yield spreads are a relatively good thing to when it comes down to trend following. You know, you could use an indicator like M-oscillator or a volatility normalized MACD, right? You could use indicators like these and do reasonably well, right? Like, oh, here's your up move, there's your down, here's now your next up rotation. But there are other limitations that if you don't understand the assumptions being used to build these indicators, right? If you don't understand the assumptions, and the truth is that learning these assumptions is like a 2-3 minute thing. It's not something like, it's not like secret knowledge or anything, right? It's just, you got to go digging, you got to read 1 or 2 academic papers and read abstracts and conclusions and then a couple selected parts in it so you actually understand some of the assumptions going into the math behind these tools that we're using to model financial assets and to create future trading expectations based off of. Once you understand the assumptions being used in the tools and you understand their strengths and weaknesses, you'll know when to not look at them and when to look at them. And right now, this is telling me, like, okay, if you're using a momentum indicator, you're probably going to do really well. However, if you're using a momentum indicator like M-oscillator and you get into an overbought condition, I mean, see how we have all these overbought conditions and it just goes in and out, in and out, in and out, and ranges around this overbought trending condition around the value of 10. If I go ahead and I turn on the yield spreads here, notice how the yield spreads are positive throughout this whole entire move up. You know, there's a couple of moments in time where the yield spreads get maybe this spot right here a little bearish, this spot here a little bearish, right? But you would have probably got instantly stopped out on that one. Yeah, you can see how the yield spreads would have held up right around here. It would have told you to be cautious and then the flip back, right? But if you go ahead and you look at this, see how choppy some of this momentum stuff can get, right? So this can be a good guardrail for some momentum indicators because yield spreads are a more, look, just to be frank, yield spreads are a leading indicator of FX prices, and they've been a known leading indicator and a factor in modeling FX prices for like the last 30, 40 years. This isn't like some random doohickey. Like if you're modeling FX prices in your stochastic model and you're not in some shape, form, or fashion, including some yield spread information into your stochastic model, it's going to be harder for you to model this stuff, because you're going to have to do some fancy math with, like, you're going to have to come up with some fancy math to figure out your autocorrelation and mean reverting, your trending, and random walk states for all this stuff here. And don't get me wrong, that might sound like a bunch of fancy smanchy stuff, but it's like a 10, 20 minutes lesson in a statistics 2 or 3 class to learn what all that means. It's like, it's not super complicated. It just, for some reason, people who have master's degrees are taught it at that level rather than, selectively people who could easily learn this stuff in like high school. It's kind of funny. There's so much knowledge that gets taught at like a master's level degree that you wonder why you didn't learn it when you were like in high school, because it would have just been so much infinitely easier and immediately applicable to improving your work or knowledge base, like immediately like that. It's like, I just spent 1 hour in this class here in college learning something so deadpan simple, but it's so freaking helpful. Why wasn't I taught this like 5 years sooner? Right. That's how I feel a lot when it comes down to with statistics, right? That's how I feel when it comes down to statistics. Although, however, if you're like in a high school or something that has like an AP statistics, class, you're getting all this. You're getting all this. But not every school even offers statistics, right? Not even every school offers statistics. Oh man, yeah. There's my little public school rant. But don't get me wrong. Sometimes it's just, sometimes it's better being a more worldly person, spending your time with friends and kind of goofing off in school. Sometimes it's chicken soup for the soul. That once you got that down, and then you head off to college, you're like, oh man, now it's time to get more serious. You become, maybe more like an adult. Although my argument is, you should start trying to behave like an adult around high school. The expectations for behavior we have for people between the ages of 15 to 18 is very, very low. I think we have to have higher expectations of behavior. Yeah, man, there's some like people in their mid-20s now who haven't outgrown the maturity of a 14-year-old. Yeah, man. Some interesting stuff out there in the world, but you know what? Not everyone's like that. Not everyone's like that. And just because they behave, those 20-something-year-olds might behave in that fashion, doesn't mean that they're bad people. In fact, a lot of the time, they're some of the most fun people to hang around because they still got that childlike eye in them. It's just, are they dicks or not? Right? So there's a little extra personal rant out of me when it comes down to this sort of stuff. Yeah, this FX yield spread stuff, it's included in the trading group in the indicators, $100 a month. All right, hop on. I'll show you how to use it. And a lot of this stuff, I really work hard on making sure that the visualizations are incredibly easy to interpret. So yeah, if you need help interpreting this stuff, you can always hit me up. Especially when it comes maybe down to the more detailed views, like, oh, how do I break this down? What do all these settings do? And I really pride myself on making sure I include a very robust amount of settings to customize the colors and determine which yield spreads you actually want on or off, and how these bars are colored and all that. I always kind of hated it when it's like you just paid, $100, $200, $300 for some trading view indicator, and they won't even let you change the freaking colors. They won't even let you change the friggin' colors. Oh my god, it's like dude, it's like a baseline thing. Like I need to change. I want to change some colors. I have like so many people have such beautiful charts out there, and they go ahead, they buy some indicator, can't change the colors, and now it's like the one indicator ruins their entire color theming and layout. Some people have some really really cool looking charts out there. Okay, you guys, we just hit the 1 hour mark. I've had a lot of fun here, and I don't know, maybe it's because I didn't have the camera on or whatnot, but I think this is a pretty fun stream. I had a pretty fun time, and hopefully you guys got a good bit of information when it comes down to some trading expectations, at least for the day ahead. I'll try and hop on tomorrow at 4:30 Pacific, 7:30 Eastern. No promises though, because after I slept the whole normal day, right? I'm here on the West Coast, so in order for me to be totally up and energetic for the morning streams for New York session, I got to be up at like 2 a.m., which means I gotta go to sleep like just as the sun is starting to go down. So, you know, no promises that I'm going to commit to continue doing that going forward, because now that I've actually had one night of proper sleep due to Father's Day, right? You know, stayed up, had dinner, all that good stuff. Now I'm on automatically, my body switched to a normal sleep schedule where, you know, I want to go to bed at like 10 and wake up at, you know, 6, 7, right? And then it takes me about an hour or so to mentally wake up and be exactly prepared, right, for the rest of the day. So, you know, I'll take a shot at trying to make sure I can do the New York session tomorrow. I'll take a shot at it. But there's no guarantees. Otherwise, if the stream doesn't happen at New York tomorrow, it's going to happen at 9:30 tomorrow, like the stream started at today. If you guys want to hang out in the Discord, I'll be in the Discord as soon as the stream is over, and I'll be in there for like maybe 30 minutes to an hour. So if you guys want to hang out, discuss some trade plans, walk through maybe some of these indicators, walk through some of the outlook stuff. In all seriousness, that's kind of like a hidden, feat that comes with being in that Plan the Profit Discord, is that just hanging out in the trading room, in the general voice chat, and going through reading outlooks as I'm posting them. Like, man, there are people at banks and institutions that have all these like great financial models of where prices should be in the future, and they're giving you their expectations for what macroeconomic events could bias their forecast one way or the other. And it's a relatively good place to start learning how to do interpretations like a professional does, because you're actually reading professional forecasts, interpretations, right? And some of these guys have been trading for 10, 20, 30 years. Some of the most powerful men in the world manage tens of hundreds of millions of dollars and have their masters and PhDs, like 5 times more educated than me, right? So it's like totally worth your time to read some of these outlooks, but it's a drag, right? Sometimes to read very dry material that has a lot of financial jargon to it. Hop into Discord, hop into the general voice chat, just sit in there for a bit and go through the outlooks. And when someone else hops in, you can actually go over outlooks with a couple of people, and that automatically makes it like 10 times more engaging, because now you have 2 people kind of searching through a bunch of trade research, looking for useful information and interpretations and things to learn, right? And I find that's a more beneficial environment than just like, oh, Joe just posted an outlook. Let me, oh shit, he posted another out. Oh shit, he just posted 5 more outlooks. I post so many outlooks, man. You know, it's a lot even for me to read through, and I try and read absolutely everything that I post. So then when someone comes and messages me about some asset, you know, do I have some expectation for Euro or for New Zealand or for Aussie? I at least relatively know what I should be thinking about, right? Because a lot of these guys are already a week or two ahead when they're writing their outlooks. And they got to be, right? They have a significant amount of responsibilities to be in the positions that they're in. All right, you guys, I'll be in the Discord and I'll be talking to you guys over there. So let me know how the stream went. Leave a comment. Tell me how you felt about the no webcam. Hopefully I'll bring back the webcam. Let me know if you guys really need it at New York, if you guys like New York or not. Yeah, and talk to me in the Discord. Maybe some write-ups, right? If you're going through and you're actually reading outlooks, it'd be nice to see what little golden nuggets you found in the general chat. And then if you want to actually plan the profit with the rest of the trading community, go ahead and post your trade plans in the trade plans forum over on the Discord. Just share your chart, share your entry, stop, profit levels, all that. And then some of the research you've done on those things. And just post trade plans over and over and over again. And over time, you'll see the trade plans will get more and more robust. And as you learn more methods of trading and doing analysis, right? Statistical forms, macro forms, micro forms, talking with other traders who do different types of analysis, maybe different types of statistics. You'll add more tools to your toolkit and you'll be able to do more and more robust analysis as you learn to do more and more trades over time. And it just starts with doing trade plans and reading outlooks and talking with other guys in the trading community. Alrighty, so with the last rant out of the way, I'll say thank you guys for watching, and I'll see you in the trade room.